All right, let's peel back the curtain on the market today. We're going to uncover the hidden story being told by just two simple numbers, the daily opening and closing prices.
So let's just dive right in with a pretty big question, okay? Because honestly, how you answer this could completely flip the script on how you see the market each and every morning.
For most traders, the open and close are, well, they're just lines on a chart, right? You draw a horizontal line, you call it support, you call it resistance, and you move on. But that's kind of like looking at a photograph instead of watching the whole movie.
The pros, though, they see something totally different. They see a story playing out in real time. It's a drama, really. A story of greed, of fear, and most importantly, a story of opportunity that's born from all that human emotion. Okay, so let's make that shift together, right now. We're moving beyond those simple price levels, and we're stepping into a much more dynamic, psychological way of looking at things. This is the first big step to thinking like an expert. Just look at the difference here. The basic view, it's all about a line on a screen. But the expert view, it sees the people behind that line. See, it's not just about where the price is, it's about what that price is doing to all the traders who went home with a position last night.
And that leads us right to the heart of this whole thing, the psychology of the open. Really, it all boils down to one key skill, figuring out who is already losing, who is feeling that gut-wrenching pain the very second that opening bell rings. And this gives us our key player in this drama, the trap trader. Just put yourself in their shoes for a minute. Imagine you bought a stock right before the close yesterday. You're feeling great, right? You go to sleep, you wake up, and bam, the market has gapped down against you. Instantly, you're losing money. You are trapped. Your whole plan is toast before you've even had your morning coffee.
And what happens next is this incredible, almost predictable chain reaction. It starts with that confidence from yesterday. Then, the trap snaps shut at the open. That confidence immediately turns to panic, which forces those trapped traders to dump their positions to stop the bleeding. And all of that selling, it creates a wave of momentum, a wave that you can learn to ride.
Okay, so theory is one thing, but let's get into the real nitty-gritty. Let's see how this actually looks in the market. We're going to break down a classic buyer trap scenario. All right, so here's the setup. Picture this. The market closed really strong yesterday. It pushed right through a big key number. We'll just use 44,500 for this example. So what happens? Tons of buyers are holding overnight feeling super confident, probably thinking this thing is going to the moon tomorrow. And this right here, this is the pro mindset in a nutshell. When a seasoned analyst sees the market gap down, open way lower than where it closed, they're not just seeing a number. They're seeing all those confident buyers from yesterday now totally trapped. They can literally visualize the wave of stop losses about to get hit, which is just going to pour gasoline on that downward fire. So it all boils down to this super simple logical deduction. 1. The buyers are trapped. 2. Their greed just flipped to pure fear. 3. They have to sell. That forced selling gives you a huge clue about where the market's probably headed, at least for the morning. And the plan? Well, it becomes pretty clear. Look for a spot to sell and ride that wave of panic.
But, and this is a big but, we need to hit the pause button here for a really important reality check. This is not a crystal ball, not even close. Reading market psychology is all about playing the probabilities. It's about stacking the deck in your favor, but it is never, ever a guarantee.
And this is something every single trader needs to tattoo on their brain. No matter how perfect the setup looks, how textbook it seems, the market will always be the boss. It can do whatever it wants. The goal here isn't to be right all the time. That's impossible. The goal is just to have a better chance of being right than wrong.
This also highlights another critical point. This psychological edge has a shelf life. A setup can look absolutely perfect at the open, but if that big wave of selling you're expecting doesn't show up in the first hour, maybe two, well, the story changes. That initial panic just gets soaked up by all the other buying and selling in the market.
Yeah, think of it like this. The psychological edge you had at the open literally expires each day. By lunchtime, those initial trap traders are probably gone. They've either sold or the market moved back in their favor. Now you have new traders, new news, a whole new ballgame. The morning's thesis is pretty much irrelevant by then.
All right, let's pull all these threads together. We're going to distill this entire idea down into a simple but really powerful framework that you can start using tomorrow morning.
So here it is, your new pre-market mental checklist. Just 5 simple questions. First, looking at yesterday's close, who was in charge, the buyers or the sellers? Second, now look at today's open. Is it working for them or against them? Third, and this is the big one, who is trapped? Who is feeling the pain right now? Fourth, what are they going to do about it? And finally, 5, how can I build a plan that goes with that flow, not against it? Seriously, asking these 5 questions will fundamentally change how you approach the open.
So I'm going to leave you with this one last thought. The next time you fire up your charts in the morning, try something different. Don't just ask, where is the price? Ask, who is in trouble? Who is trapped? That simple little switch, from where to who, well, that's the real professional edge.